Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today, we have with us Joe Massey, who's the Senior Loan Officer with Castle and Cooke Mortgage. Joe, welcome to the program.
Thank you so much for having me, Mike. I'm really excited to be joining you guys today.
Hey, you are welcome, and we want to get started. Tell us about your story. What's up with you? How'd you get into the business? Sometimes we hear some really interesting stories of, well, hey, I was doing this and all of a sudden. So it's always neat to hear people's individual stories. So what got you initially interested in the mortgage industry?
Oh, such a great question. You know, I went to Colorado School of Mines and graduated in December of 2001, shortly after 9/11, and had gone to school for economics and management and had planned to work in the petroleum industry. And that industry was going through a lot of turmoil after 9/11 and was having trouble finding a job, and did what I recommend for all young people in college or graduating college to do. And I called my database. I reached out to folks that I had done work for as an intern, had worked making copies and, coffee runs, and had worked for a couple different mortgage companies. And didn't know anything about the mortgage business, but reached out to my database and landed at a company called Aurora Loan Services. They were hiring some folks, and that was in February of 2002, and have been doing mortgages and helping people buy homes and refinance homes ever since.
Wow. So here's something that I think is super important of a takeaway just right there in that opening statement. So many times people are like, oh, how do I grow my real estate business, my mortgage business? Let me go buy ads. Let me go advertise here and Facebook ad, all this stuff. Well, here's the thing. It is a relationship business. That's right. People working with people. It is providing value. And what you did was maybe even just natural to you, but maybe you got some advice from someone and just took it because either way, it's amazing. It's either came natural or you heard advice and took action on it. But man, talking to your network and doing it old school, like actually calling and speaking words to another human being. What? You didn't just blast out an email and go, anyone have a hookup. So I think that is so huge is your net worth is predicated by your network. And I think that is so huge. So is that kind of how that, did you get advice on that, or is that just what came natural?
You know what? Such a funny story. I was sitting at my mom's house whining and crying that I couldn't find a job. And this had been going on for a couple of weeks. And she finally got tired of listening to it and said, Joe, I think what you really ought to do is call everybody that you've ever worked with or worked for. And I was like, they're not going to remember who I am. She's like, that's not the point. She's like, first off, a couple of them will remember you. And if you call and be nice and say, this is what I'm doing, people are always looking to hire good people. And what do you know? My mom was right. Nice. And I've been in the mortgage business ever since.
Yes. Awesome. Thank you, Mom. But for real, there is so much out there these days at our fingertips, whether it's Google or, they say knowledge is power. And I say, no, it's not. Knowledge is potential power. You've heard that before, because the true knowledge and the true power comes when you implement the knowledge. So that's really, really huge. So back when you got into the business was sort of some tenuous times. So you had to kind of do the same thing. You get your, put your mortgage hat on and then start networking. What was the first way that you started growing your business?
You know what I did? I did work at a company that provided leads, but it was one lead a day. So we got one lead a day. And if it was a good lead or bad lead, or you couldn't set the appointment or whatever happened with that lead, you either made a sale or you didn't, and you had to wait till the next day to get your next lead.
Glenn Ross.
What's that?
Glenn Ross.
That's right. Yeah. But there's a lot of downtime if you only get one lead a day. And so what I did is I learned how to explain a refinance, how to explain a purchase loan. Wow. And I called, again, this was a tip from my mom. I said, I need to practice my presentation. And of course I went over and practiced with her. I said, who else do you think I should call to practice? And she said, why don't you call all of your football player buddies? Because I played football. She said, call all of their parents and just say, hey, it's Joe Massey. Remember me, number 42. I played football with your son, Andy, and I need to practice explaining loan programs. Ooh. Would it be okay if I came over and explained this to you? And I'm not looking for you to refinance or do anything. And 100% of them all said yes. I called 25 people, and all 25 of them, of course, were very gracious. Yes, Joe, we remember you. We love you. We'd love for you to come over and practice your presentation. And out of those 25 presentations, this will blow you guys away, I closed 22 transactions.
Oh, wow. Oh, my
I either
word.
closed a refinance or purchase for the folks I gave the presentation to, or they referred me to one of their friends or family. And ever since then, the power of the database and just calling people, it works. And so that was really how I cut my teeth, was just practicing. And I'm sure looking back, those presentations were probably terrible. I stuttered. Yeah. I had wrong information, but you know what? They were gracious, and I did provide value. And a lot of them were surprised. Holy cow, we do have some options with our mortgage or with our house or whatever it might be. And so it was amazing.
Not only did you practice, but you got paid for it.
That's awesome. Right. That's right.
Talk about times now. Mike just mentioned 2008, 2009 timeframe and all. Mm-hmm. Talk about, is it a good time now to be looking at real estate?
I think it is, and there's an old proverb. I believe it's a Chinese proverb, some wisdom that says, when is the best time to plant a tree 20 years ago? When is the next best time to plant a tree? And that's today. And I view real estate the exact same way. You've never met somebody that says, boy, I really wish I wouldn't have bought that property 20 years ago and kept it for this full 20 years. And I feel like today is the exact same. There's a lot of uncertainty. As everybody here knows, interest rates have increased. Home prices have gone up faster than at any point in history. There's some folks that think there's going to be a crash, and we could get into the details of why I think that there's not going to be a crash. But the most important thing is, through good times and bad, over the long term, real estate does really, really well. Whether you're buying a home to live in or an investment property or even a piece of commercial real estate, over a long period of time, real estate is a terrific investment. And I think now is still a great time to buy. And I could get into some of the specifics, but for a long time horizon, it's great to purchase property and hold it for 5 years, 10 years, 20 years. So I think it's a terrific time right now.
I agree with you.
Yeah, definitely get into some of those specifics, because I think there's too many people that hear the news, read the news, watch Twitter and like, oh, run for the hills, recession, uncertain times, inflation. Yeah, but you know what? Maybe this is the time to lean into it and take advantage of things. So what are you seeing?
Yeah, so exactly what you said, the R word, recession, that everybody's afraid of. In 5 of the last 6 recessions, home prices have actually increased. The only time that wasn't true was in 2008. We had a recession, and home prices did go down on average by 19%. But that recession was caused by the housing crash. Yes. All of the other 5 prior recessions, we have actually seen an increase in home prices anywhere from 3% to as much as 9% during the time period of the recession. And I think this looming recession that we are either in or coming up to is going to be the same. I don't think we're going to see the 20% appreciation that we saw over the last 2 years, but I do think we're going to see 2, 3, 5% appreciation, maybe more, maybe less in certain pockets. But we're not going to experience a crash like we did in 2008. I just don't see it.
You said something interesting, the last 5 recessions. I think back in the day, I distinctly remember all of those ones. And the first time it's like, oh my word, recession. And then it's like, oh, recession. And now it's like, what? I think you have to have that mindset, because recession, sure, make sure your, ducks are in a row and all of the good things you need to do. But it's not like it's the end of the world. Make good moves. Be connected to people in the know that you can rely on for good advice on making some wise moves. But it's not like, the sky is falling.
That's exactly right. The sky is not falling. Interest rates have gone up to a level that many people in our business haven't seen. But I remember when I first started doing loans in 2002, first mortgages were at 9% and second mortgages were at 14%. And people were thrilled with those transactions. Mm-hmm. And some of those people that I helped still own those homes, and they have doubled, tripled, maybe even quadrupled their money, regardless of what interest rates were at the time.
You make the best moves for where you are right now. If you need to buy a house right now because whatever, you have kids on the way, and you got to buy, whatever the reason is. Make the best move with the information you have right now. And then it's a long haul. Don't try to fix. I mean, don't take the fix and flip mentality if it's your primary residence. Now, if you want to fix and flip, that's great. But I think that too many people, look in the rearview mirror for the last, year or two and go, ooh, things have changed dramatically. But like you said, back a handful of years ago, the rates currently are pretty decent and they'll get better in time.
That's right. There's a phrase I use. I have a lot of catchphrases that I use, but one that I really like is time in market is more important than time of market. Meaning maybe it's more expensive today than it was a year ago, but if I can't go back and buy a property a year ago. I can't go back and buy a property 5 years ago. But if I buy a property today and I hold it for 5 years or 10 years, that time in the market that I've got my asset, the property, I'm likely to make a really substantial amount of money, regardless of when that next 5 or 10 year period is. If I hold it for a long period of time, very high likelihood I'm going to make money. And so trying to time the market, just like the stock market, can be a very difficult thing to do and a very difficult thing to do well. So I think now there are some opportunities with timing in the market that you may get some discounts on properties. You may get some seller concessions, but more important than that, why do you need to buy a home? You've got a baby on the way. You're getting married. You're getting divorced. You're moving out of your parents' home. What's the reason why you want to buy a home? And do you have a long time horizon? If you're buying a home to try and sell it in 6 months and make money, probably doesn't make sense. Maybe you should rent. But if you're holding it for a long period of time, home ownership is a great way to generate wealth.
And as
not,
you,
go ahead,
sorry, Mike. As you said with the Chinese proverb, when should you plant that tree? When should you buy that house? Today will help your time and market get there sooner.
That's exactly right. That's exactly right. And I've actually had several of my clients recently that were able to get under contract at the list price of the home, or lower sometimes, and also getting seller concessions, which is something that was not available for the last 3 or 4 years. And for our listeners that aren't familiar, seller concessions is a percentage of the seller's proceeds that can be used to pay the buyer's closing costs. So a lot of times in the past, you were having to pay above list price and pay all of your closing costs and maybe pay $10,000 or $20,000 above the appraised value. Now we're not seeing that, and buyers are able to purchase with that minimum 3.5% down or 3% or even $1,000 down, and sellers are helping with the closing costs. And I think that's a relatively short window of still availability. I think by the time we get to, early to mid spring, by the time we're into March and April, it's going to be not a crazy market like it's been the last few years, but I do think there's opportunities now that may not be available in 60 days.
100%. Think of like the bell curve, things are going up and what comes up or goes up must come down. And it's just that constant flow of change in a positive sense. And like you said, if someone wants to buy a house, cash out in 6 months and make a profit, might want to pump the brakes on that. But can you think of any recent stories of clients that have bought a property, maybe at the right time, like you mentioned, like now might be a time to get some concessions? Articulate that a little bit with some examples of maybe a first-time home buyer or move up buyer, move down buyer kind of a thing. What could people be looking for in the market currently?
Yeah, absolutely. I met with a client this morning, wonderful person. She's a nurse, works really hard, great job, but doesn't have a ton of money to invest. She has saved up over the past 3 years, just over $15,000 for her down payment. And she got under contract yesterday, and I met with her this morning. She's under contract to purchase a new property for $310,000. And the seller is contributing $9,300 towards her closing costs. That allows her to invest only her 5% down, which is, what she has saved up. So just over $15,000. The seller is covering all of her closing costs, and her new monthly payment is going to be $2,200 a month. And it's actually cheaper than what she's paying in rent. She's paying $2,400, and she's in a 2-bedroom apartment right now at $2,400 a month. Wow. And she does have a roommate, but she's going into a 3-bedroom home with a garage on, I want to say it's like 1/8 of an acre. It's in Commerce City, but she'll have some space to park an extra vehicle. And it's about $200 cheaper every month than her rent for a 2-bedroom apartment. And she's investing just her minimum down payment, and the seller is paying all of her closing costs. And that's something that was unheard of the last 3 or 4 years.
Yeah. That's an amazing story. Nice work.
Yeah, and I love seeing those, right? She's a good, hardworking, regular person. I'm not talking about some millionaire real estate agent or somebody that's got all this money in the bank. She's just a regular person, and these opportunities are out there. And I think that's what we forget sometimes is having a great, real estate agent, having a great mortgage lender, really expressing your needs and your goals and being patient and finding the right property. An average person in Denver still can find housing, even though, a lot of the headlines say there is an affordability crisis, which is true, is a real thing. But working with the right professionals, saving up for a down payment, making the right moves in your personal financial life, that dream of home ownership is still very much available for folks that are willing to take that risk and willing to find the right property. So back to the original question, I think it's a great time to buy. I think there's a lot of great opportunities out there.
And your nurse example there that you met with this morning, I was almost going to go, hey, Joe, I asked for a recent story this morning. No, I mean, how perfect. Here's this person that worked hard, saved up a buck or two, now has the debt, all of those things. But here's the really cool thing, and you would love to be a fly on the wall or have a phone call in a period of months for this person to contact you back and go, oh, you know what? Pride of ownership, American dream. Yeah, love it, love it, love it. Oh, I'm saving a couple $100 a month and use the down payment that I had. Love that too. But wow, when I get to tax time and my tax accountant told me about the benefits I get from mortgage interest deductions, what a big lift that is. And then a couple years down the road, or 3 or whatever the case is, and then they see some equity growth. Wow, that now becomes the W word, wealth building. And people don't realize the full picture until they actually experience it, I think.
Yeah, you're exactly right. Just to do some really quick math, she's buying this property for $310,000 and she's investing just over $15,000. Let's say this home of $310,000 goes up by only 3% this year. So it's going to go up by a little more than $9,000. Well, she's only invested $15,000. That's over a 60% return on her initial investment in the first year in what everyone else is coining a really bad market. I don't know where else you can go and get a 60% return on your money. I certainly don't get that in my 401k or my IRA. And, there's obviously all sorts of caveats to it. But if the market continues even at a stable growth rate of only 3%, she's going to be building wealth and doing really, really well, just like you said, Mike.
And that doesn't mean you should go blindly in and throw money into something without knowing the path forward and without choosing the right program. So talk a little bit about some misconceptions people have, because you hear a success story and you go, yes, let's do it. But what are some roadblocks and hurdles people should understand and avoid?
Yeah, I love that question. I think a big one is affordability. Interest rates were very low for a long period of time, and now interest rates have increased to, frankly, an appropriate level for our economy right now. But you do need to look back and say, hey, I really wanted to buy 2 years ago a $600,000 home, and that had a payment of, $3,500. And now that $600,000 home has a payment of, $4,500. Boy, I can't afford that. So I'm going to stretch my budget and I'm still going to buy that $600,000 home, but it's going to be really tight on a monthly basis. Well, maybe that's not the best choice. Maybe you might want to think about, hey, I really want a $600,000 home, but I really want to keep my payment below $2,500. So maybe we need to be thinking about a $350,000 or $400,000 home. So I think it's important that people really look at their personal finances and really take a long, in-depth look and say, I really want that $600,000 home, but do I want the payment associated with it? Is it going to be easier for me if I select something a little more smaller price with a smaller monthly payment? Is that going to give me some breathing room in my monthly budget and some breathing room in my life? So that's something that we counsel a lot of our homeowners on is, yes, maybe you can qualify right up to that very maximum price, and we can help you if that's what you decide to do, but maybe you should look at something a little bit lower than that maximum qualification just to give yourself a little breathing room in case there's changes in the future.
Well, changes, but also things you don't think of, because what if you lived in a $300,000 home and wanted to move to a $500,000 home and you can afford the payment? Check. The box is checked. But wow, maybe the HOA is a higher amount than you're paying. Maybe the electricity bill, like here in Colorado, for the last 2 months, my electricity bills felt like a second mortgage. It's like, what's going on? Yeah. So, I mean, when you go to buy a bigger house, there's other things that aren't in the payment. Like, you do your principal, interest, taxes, and insurance. Okay, cool. But what about even electricity? What about upkeep? What about all these little things? And if you don't have that margin, then that beautiful house that you're so excited about day one starts to feel like, ugh, this is such a drain. So I love that you are teaching and educating and guiding people into making those right decisions.
Yeah, what you described, I call it the unexpected cost of home ownership, right? We can do all the spreadsheets, all the calculations, all the math, and on the first day you move in, something's going to happen that you didn't expect. You're going to need to fix the furnace, or your couch doesn't fit and you're going to want to buy a new couch, or gosh, we forgot we don't have drapes and we can't just hang up our Scooby-Doo sheets over the windows. We need to go buy window coverings, right? There's always something. And so I encourage so many people, don't buy right at that very maximum price range. Give yourself some breathing room, because there's going to be something that comes up. No matter how much we plan for it, something unexpected is going to happen, and you want to have a little bit of a cushion.
Well, Joe, what are some of we'll kind of wrap up with this last question. When you're guiding people into making the right choices, what are some of the loan programs that are tending these days to fit best into buying a home?
Yeah, I love that question. So a lot of what we do are pretty vanilla loans, regular 30-year fixed rate mortgages with principal and interest payments. We certainly have options for adjustable rates. We certainly have options for 15-year fixed. We have options for loans where you can buy down, have a temporary reduction in your interest rate. We have loans that we can qualify folks based on the cash flow of the property. But frankly, I remember subprime lending, and I did subprime loans, prior to 2008, and I learned a lot. But I also learned that those can go bad if you're not careful. And so I spend a lot of time with every client counseling them on, hey, here's the pros and cons of a 30-year fixed. Here's the pros and cons of something that's variable. And by and large, most people, when they're buying a home, it is generally their biggest purchase ever. And I'm really proud that most people select a 30-year fixed because it's stable. They know what it's going to be doing for the next 30 years. And here's one really cool thing about it. It's inflation protected. Everybody's worried about inflation right now, just like I am. But the nice thing about a 30-year fixed rate mortgage is that principal and interest payment doesn't change if inflation goes up. And so I really encourage a lot of people, hey, we can show you all the different options, but a 30-year fixed is stable, it's consistent, and really allows you to plan for the long term without too many unknowns. So that's kind of a boring answer, but a 30-year fixed works really, really well for a high percentage of people.
It's like, thinking of football, just learn the blocking and tackling, get that done right, and then work on the trick plays and all that. But yeah, it's the foundational things. You won't go wrong when you're being conservative. And I think that is such a perfect approach. Well, Joe, it's been a real pleasure having you on. I love your approach to serving your clients and teaching them. If someone's listening to this thinking, hey, what can you do for me? What's the best way they can reach out and connect with you?
Yeah, several ways. Of course, my phone number, you're always welcome to call me directly, 303-809-7769. My website is loansbyjoemassey.com. And then you're also welcome to follow me on all the social media channels, Facebook, Instagram, LinkedIn, TikTok, and YouTube. My handle is @jmasseylending. And one thing that I'm really proud of is we're actually recording all of our educational pieces. I'm an approved CE provider, and we have a 20-course curriculum with things like how to qualify for your first home, how to buy your first investment property, how to build an investment portfolio. And we're recording all of those currently and putting them out on each of those social media channels. So some of them are as much as an hour long, but a lot of them have been shortened down to 3 minutes or 5 minutes. We do those with PowerPoint presentations, and real world examples. So I would encourage anybody that wants to learn more. I highly, highly believe in education and just helping everybody out there understand more about their personal finances and their personal mortgage options. So would love anybody, feel free to reach out to me, follow me on any one of those social media channels, or of course, check out our website.
Awesome. Thank you so much for coming on, Joe. We really appreciate your time.
Thank you very much for the invitation. I really appreciate it and enjoyed the conversation.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.